Like I still want to see like unicorn. Hello, I'm Shayanna Hayden. I chose my two prompts to be AI-based credit scoring systems and to talk about AI-powered fraud detection systems and their risks and opportunities and recommendations. So I'm just going to start with the AI-based credit scoring systems and how transforming financial inclusion through technology. So, with examples of Upstart and their approach, they use AI to analyze thousands of data points beyond traditional scores, and they evaluate key alternative indicators, including employment stability and income patterns, educational background, professional experience, spending and saving behaviors, signs of responsibility, responsible financial management of an applicant. And the results are significant and it provides instant loan decisions instead of weeks long waiting periods. They reduce unnecessary paperwork and human bias in the selection process, and also expands credit access to those with limited credit history. And we also see Zest AI approach. They recently launched Lulu, their generative AI lending companion, offers real-time lending analysis and portfolio performance metrics, provides strategic insights for lending organizations, helps optimize lending performance while maintaining compliance. Key benefits for underserved populations with their approach are more holistic evaluation of financial health, faster approval processes, reduced reliance on traditional credit scores, more inclusive lending practices based on actual financial behaviors, and personalized loan offers reflecting individual circumstances. Its impact creates more opportunity for previously excluded borrowers, evaluates borrowers based on real financial habits rather than just credit scores. They also offers competitive rates through comprehensive risk understanding, reduces subjective decision making in lending, enables more accurate prediction of default probability. So with AI-based credit scoring systems, they have risk and opportunity. In my risk and opportunity assessment, I found key themes of behavioral pattern analysis, alternative data sources, looking beyond the applicant's traditional just credit scores and real-time decision making. The opportunities of AI-powered analysis and credit systems include thousands of alternative data points, like whether they're a student or whether they do have a mortgage while they're in school and they've made, their mortgage payments on time, or if they are renting, but they've made their rent payments on time for the past year while they were in school. And they also have, their income level, how much income they have coming in, and just looking at the different data points and how they're managing their money responsibly instead of just the credit score itself. Also, with that, looking into real-time decision making and reduced processing time in this process. So, in AI-powered analysis, it is pulling, for example, using a nonlinear algorithm. It can pull, those different data points while it's happening, while the consumer is, making those purchases in that point in time. Key benefits include expanded credit access, personalized loan offers, and reduce human bias. Risk include demographic disparities in these AI-powered analysis algorithms, like using if the data is not processed thoroughly or um, if data workflows are have a ethnic group bias already included in, or if AI just automatically picks up a bias based on the data, that can create a risk of demographic disparities with ethnic group bias, income level discrimination, geographic pre prejudices, and access barriers, and then digital literacy gaps and tech access issues and banking history requirements. Recommendations include just data innovation, using algorithms like nonlinear algorithms, having the ability to pull from multiple data sources and looking at alternative data sources and quality standards, um, automating in cleaning out the data. You can automate quality standards and quality control, and also just diverse sampling rather than just the credit score number itself or just one income level. Also including, okay, they have this income level, but they also are renting at this amount. They've made this many on-time payments, and they're also in school, and they have this GPA while making their rent payments on time, while making it to work and being successful in school. So I think that'll be a big data innovation, looking at the applicant as in a holistic evaluation. Also, just model enhancement, fairness, metrics, transparency measures, and regular testing, ensuring that the fine-tuning in the data is there and that it's not picking up any of those biases and making sure it's keeping consistency and looking at the applicant in a holistic view, going to the transparency measures and fairness metrics. And so maybe just having notifications similar to Duolingo and how they send notifications you haven't been doing your lessons. Same with AI powered analysis, they can send, you know, notifications to the consumer saying you overspent this. Why did you buy this? And just giving embedded finance suggestions to the consumer while they're making their purchases based on those behavioral patterns. The next prompt I chose was AI-powered fraud detection systems. The key themes I found using AI and fraud detection is financial transaction fraud, identity theft, insurance claims, healthcare fraud, e-commerce fraud, and credit card fraud. Opportunities I found were enhanced detection, real-time prevention, pattern recognition, adaptive learning, business benefits, and reduced losses, lower costs, and increased trust. Risk found with AI and fraud using through fraud detection, technical risk, like systems breaking down, systems being hacked, whether a hacker knows a company is using AI powered to prevent them from getting into their systems, bad actors, things like that. Also system failures, integration issues, and then just data quality. So it's not picking up. something that is fraud, while it could be picking up something that isn't fraud. Um, so ensuring the integration and data quality is clean. Also, just compliance and business risk, making sure um, using AI is not invasive to the consumer or breaking any laws to consumers' privacy. Also, regulatory concerns, privacy issues, and implementation costs. Recommendations to these risks and opportunities will be ensuring that um, companies use implementation strategy, phased approach, pilot testing, success metrics, governance framework, and clear policies, regular compliance, and quality control systems in place.